concrete details on asset sales from both Rio and BHP. This seems to be the overarching objective of both chiefs, but will it be lost in the production number story?
Well, in the face of softer commodity prices, we have seen both BHP and Rio Tinto and other miners battening down the hatches, and what we are seeing is asset sales. But it is a difficult environment to be selling assets into. More and more we are seeing delays in major projects until commodity prices do start to increase again. We are watching that commodity space very closely this week. As Evan mentioned, we'll hear from Rio Tinto tomorrow. We'll hear from BHP on Wednesday. Now, both of these companies would have been hit by the wetter weather, so we are expecting to see production, the quarterly numbers coming under pressure. But demand has still been strong for commodities despite the weaker prices. So we are expecting to see sales holding up there, but more supply is going to come online in the next few years in terms of iron ore, and that's a key consideration when looking at some of these commodity-based stocks, especially the iron ore and the copper area, where we are probably going to see excess supply over the next couple of years. It's going to be also a big week for the oil sector. We will also see production reports coming through from Woodside Petroleum on Thursday, as well as Santos on Friday. So all in all, that mining space, the materials and the energy space will be the key focus of the market, and it's not a good start for that mining space. We have seen Citi coming out and sounding the death bell on the 4 years commodities boom that we have seen. One area that may hold up is the financial space. We're seeing Goldman Sachs coming up to upgrade both NAB as well as CBA this morning. But all in all, it should be a pretty big day for the Aussie market. We'll see a raft of numbers coming out of China, and that will also be important for the commodity space. We'll see industrial production that's expected to come in at 10.1%. We'll also see retail sales as well as fixed asset investments. Both of these numbers expected to come in at 12.8%, and of course GDP numbers, and this is going to be the big one, where we are expecting to see an uplift up to 8%. So that could have an impact in terms of that commodity space, but all in all, a shaky start for what's going to be a pretty big week for both the materials and the energy space.
Continue this discussion. I'm looking at Newcrest's fortunes. We were talking gold before. That stock tanking by about 6 3/4%. Perhaps no surprise, but there you have it in stark relief. Let's talk M&A, Julia. Norfolk, unanimous recommendation from the board to take on board the offer from RCR, a cash scheme. Break that one down for me.
Carsten, I think we're going to see more and more of these in that mining services space, as well as perhaps the mining space, and that's because a lot of these companies are in a difficult position. And if we have a look at Norfolk Group, this is one of these companies where it's a very low margin contractor. If we have a look at its half-year numbers, its margin was just 1.4%, which means that it was very vulnerable to things like project delays, project cancellations, non-payments. So really what Norfolk needed to do was raise capital if it didn't see this takeover offer come through. And of course, it's a very difficult market to be raising capital in terms of that mining space and that mining services space. So all in all, it does look like they have recommended this offer by RCR. Now, if we have a look at RCR, they've come in at an offer of 48 cents for Norfolk Group. That is actually lower than the last traded price on Friday at 50.5 cents, but it is higher than their original offer of 38 cents, although their original offer also included a percentage of the debt that would have been recovered. But all in all, it does look like a lifeline sent out to Norfolk Group, which was otherwise looking at a possible capital raising. For RCR Tomlinson, what it means for this group is a shift away from their normal, mining type of revenues. It's a shift away and a bit more of a bias towards those infrastructure and rail stocks, and that's a positive given the environment that we are seeing in that mining area at the moment. They're probably bidding at the low of the cycle for Norfolk Group, so it looks like a positive acquisition for RCR Tomlinson, but we are expecting to see Norfolk Group shares dropping on the back of this offer because it is lower than the last traded price.
Yeah, yet to register any move, but watching it. Still on M&A, just staying with you, Julia, Computershare, a bit of a minor investment in terms of dollar value, 10 million moving into InverShare, but perhaps a longer-term pipelines opportunity awaits, and how are you therefore judging it?
It is a relatively small acquisition for Computershare, spending $10 million on another acquisition in the US, 25% of InvestShare. So once again, in that shareholder communications area that Computershare is renowned for across the globe. But it does come at a time when Computershare is struggling in terms of its business, which isn't surprising given the market volumes, especially the volumes that we are seeing in the IPO as well as the M&A space, which is where the fat margins are for Computershare. In the first half, we did see see profit down by about 15%. We're probably seeing the lowest level that we've seen for Computershare since the global financial crisis in terms of its underlying business. If you are investing in a stock like Computershare, you're really looking past the current weakness, and you're looking past the low. So once we do start to see a pickup in activity, then Computershare is a stock that's highly leveraged to market activity. Now, the company is still forecasting full-year growth of between 10 to 15% in terms of earnings per share growth. All in all, a small acquisition, but no doubt with the market falling at the present time, we are going to see stocks like Computershare coming under pressure because of the leverage to market activity.